All right, so hope everyone is doing well. Let's break this trade down. So focusing on the higher time frames first, I think you guys remember that on the weekly chart, we've been on this bullish order flow pushing towards our upside targets. The main bigger draw on liquidity being this high right here because we are in this bigger weekly time frame buy model. So this is where our main attention goes to. And on the way, of course, we take out more and more smaller buy-side liquidity pools. So this is what we are focusing on essentially right here. After price rejected this low, we didn't get any moves to the upside because this happened during NFP. So obviously we had to stay patient waiting for other opportunities. So now on the daily time frame, this whole move to the upside literally didn't give a single entry for us. So after that, after price took out this buy side liquidity that we've been focusing on for quite some time, we saw price react and drop lower. So from this point, our eyes dropped right to this bullish fair value gap on the daily time frame. We had some of the lower time frame imbalance overlapping there as well. So once price rejected it, we didn't see anything on these 2 days right here. We had Friday, which was completely moving sideways. Then we had Monday, which was also a sideways day. So a lot of the time that happens, you guys know that Friday and Monday very often is just simple consolidation days. So we didn't see anything here. Then after that, on Tuesday, we saw a nice expansion. But again, PPI didn't give any opportunities for us. Even though we expected everything to happen, we literally predicted every single move right here on this expansion day right here, but PPI just simply didn't allow us to jump into this move. So the next day, as we got very close to our main target, this is when we opened today expecting for a classic buy day to happen. So when we get this close to our main draw on liquidity, this is when we usually see price move in fast momentum, literally just being in a rush to tag off these higher time frame draws on liquidity before it closes. So in other words, we had ourselves a very clear bullish daily bias right here, bullish daily stage. So we opened expecting for a classic buy day to take place. So it is London Killzone low of the day, New York Killzone continuation. But again, today, as we have CPI on the New York Killzone, this is of course when we want to catch our opportunities in the first half of the day, ideally during London Killzone. So that's exactly what happened today. So now dropping lower on the 4-hour, what we had here. So now on the 4-hour, you can see that last week, right here, price printed this high of the week that happened on Monday. So basically, price continued moving into the same bullish direction after NFP Friday right here. It formed this top, reacting to this institutional level right here. It dropped lower, built some sell-side liquidity here. We knew that it was approaching our imbalance points right here, overlapping imbalance on the daily and lower time frames. We had this bearish fair value gap right here. Price rejected it, forming this high, dropped right into this area, into the equilibrium of this whole lower time frame dealing range that we had here. So from this point, we expected for price to start reacting higher and start pushing higher. So in other words, what we wanted to see was a lower time frame market maker buy model to take place. This previous week's high right here, all this buy side liquidity acting as the original consolidation for us. So what ended up happening? Notice this vertical line. So this is where sell side of the curve happened here on the 4-hour. After that, notice that with this momentum right here, after we saw accumulation, we saw manipulation, this is when we started expecting distribution with weekly and daily time frame developments being on our side. So once we saw price consolidate inside of this bearish fair value gap, eventually it climbed higher. This is when we expected for price to start switching into bullish delivery, and exactly that happened, which was yesterday. We wanted to see price drop into this fair value gap, which in this case, as price went above it, was inverse fair value gap. So in this case, our focus went right to the consequent encroachment of this right here. I think you guys remember what I've been expecting was literally for price to drop into it and start pushing higher. Unfortunately, as I already mentioned, PPI messed a lot of things for us again. So inside of this whole expansion here, and inside half of this expansion, red folder news literally just messed some of our plans right here. So of course this happens, and that's completely outside of our control. So after that, you can see that it went higher, and this day, after price consolidated during PM hours, we opened again expecting for a classic buy day to take place, which is London Killzone low of the day, New York Killzone continuation. Main draw on liquidity being the previous week's highs right here. And the level that we have right here is literally just a 20 pip mark above our main drawn liquidity. So you guys know that during expansion days, very often price likes to expand around 20, 40 pips above big numbers and above main draws on liquidity. So this wasn't some important target right here, but just something that I marked for myself. So now going to the 15-minute time frame to see what we had there. All right, so as I already mentioned 10 times, what we've been expecting was for London kill zone to run liquidity, giving protraction, form low of the day, and start expanding towards our main targets, which was previous day's highs right here, but the main target and drawn liquidity being previous week's highs right here. So price right after Asian range, after this whole low volume period, price was simply accumulating. As you guys already know, after the New York Midnight Open, right up to the beginning of the London kill zone, a lot of the time, price also has no direction, it's just moving sideways right here. So we saw this large accumulation, then we saw manipulation, price took out the sell side liquidity, and on top of that, which was cherry on the top of the cake, was this SMT with DXI. So in other words, DXI took out the structure when the EU failed to do that. So we had this nice reaction running sell side liquidity. So in this point right here, as it happened during London kill zone, at the very beginning of the London kill zone, we've been already expecting for London kill zone to form a low of the day. So this is when we start paying attention to what is happening on the execution timeframes. So now dropping to the execution timeframes, this is what we had right here. Price before the London kill zone left this buy side liquidity pool right here. Then we had Asia range highs, and then we had previous day's highs, and main drawn liquidity being the previous week's highs. So once we saw that SMT taking place and 15-minute giving that protraction move, this is when, of course, we go to the execution timeframes looking for that last piece of the puzzle, literally to confirm that we are about to switch into bullish delivery into buy program, which was also, if we zoom out right here, a market maker buy model that happened on a 2-minute time frame and 15-minute time frame right here, which was literally inside of a buy side of the curve of a bigger 4-hour market maker buy model. So this was a tiny fractal right here, which was acting as a very nice confirmation, of course. So focusing on this development right here, notice that the low formed at 2 a.m. Then we had this fair value gap, so of course we stayed a bit more patient. We saw price react lower, so this wasn't an ideal formation because we had this low and a higher low very close to it. So in this case, we know that a lot of the time, this is a sign of low resistance liquidity. So I simply waited for more. I waited for price to fully take out this high, which wasn't ideal as well because we didn't have a strong blast to the high. Price literally left a couple of wicks right here and pulled back into opposing PD raise. So at that point, we had this inverse fair value gap. We had this bullish fair value gap right here and this bullish order block. So price rejected that, gave another expansion, taking out this high. So if we had expansion 1 right here, this was our expansion 2. Price pulled back right into a BPR. You can see this bullish fair value gap filled with bearish fair value gap and then filled with bullish fair value gap once again. So we had this BPR, price retraced right into it, also touched into this old fair value gap right here. Everything is happening inside of this bigger inverse fair value gap too. Price also pulled back right into the OT zone right here of expansion too. So you can see how many overlapping levels we had here. And this is something that I can't stress enough. The more overlapping PD rates we have, the better. This is simply when we build confidence to push towards our main targets. So remember that entry model is not something that will make or break your trading. Entry model is literally just a last piece of the puzzle. When we see every single box ticked off from the higher time frame direction, higher time frame drawn liquidity, lower timeframes confirming that by switching into the same direction. Then we open on that specific day, ideally on Tuesday, Wednesday, or Thursday, expecting an expansion day to take place. And I'm talking about a classic buy day, which is again London kill zone low of the day, New York kill zone continuation. This is again when we had every single box ticked off from the higher timeframes to the lower timeframes, so the foundation was already built for this move to happen right here today. And this is the main thing that will give you a proper win rate. Not the entry model right here, not the execution timeframes, not the entry model, because this is literally the last step. All we want is for execution timeframes to confirm of what we are seeing on the lower timeframes, assuming that lower timeframes ideally already are in alignment with the higher timeframes. So again, what we had here was price taking out this high, giving expansion 1. We saw pullback, so those who wanted to be a bit more aggressive to not miss this move, you could have entered right here with stop loss covering most of these lows right here. Or if you wanted to be a bit more patient, in this case, I wanted to be a bit more patient because, again, this was a very early low of the day. We had this low and close, we had another higher low. So a little sign of low resistance sell side liquidity. Also, the break above this high wasn't ideal too. So after that, I waited for a bit more, which was second expansion. And after this pullback happened, you could have literally just entered right here. So I was slightly too late, so I jumped live into this move right here with my stop loss covering this whole confluence area, this overlapping bullish PD zone. After that, we saw price taking off higher. So my first partial point was previous day's highs. This is when I removed my risk, moving stop loss to break even on this first position. I didn't look to scale in inside of this pullback right here, even though it very nicely rejected this bullish fair value gap. When I'm looking to scale in, I always want to have my first position already at break even. And this pullback happened just way too close to my first position's entry right here. So I waited for another expansion. We had a tiny reaction to the Asia range highs right here, then even bigger reaction to when price ran previous day's highs. And this is when price dropped lower into this bullish fair value gap, is when I already had partials taken, stop loss on the first position at break even. This is when I jumped into my second position, right at the high of this fair value gap, with stop loss covering this lower here, aiming for, of course, the main draw on liquidity, which was previous week's highs. And from there, I let my trades run. After price dropped into this bullish fair value gap, it went higher and dropped lower again. This is when on my second position, I moved stop loss to break even as well. Took some partials because this was at first looking like a bit of a bigger pullback that was possibly coming in right here. So I had both of my positions at break even, partials taken at this level right here, some more partials taken on both positions around here. And after that, I left majority of profits run towards the main target. Now, why I like this specific scaling? Because remember, guys, that we had everything in line for price now to move towards this bigger draw on liquidity. So what happened here was a simple bear trap. Notice that it was just a simple liquidity shakeout. Price was consolidating right here, so it built liquidity above this high and above this low. So what happened? Price ran higher, taking out this buy side liquidity and previous days buy side liquidity, dropped lower, taking out sell side liquidity of this low into opposing PD ray, which was this bullish fair value gap. And this is when a lot of traders are looking for short opportunities, placing stop losses above this high right here. But they are moving against the main direction. They're trying to push against the main drawn liquidity for that day, which again was this level right here. So this is when I like to fade them. So as price dropped into this bullish fair value gap, I entered my another long position. After that, notice what happens. Price runs higher again. It builds some liquidity. It runs the high of it, it runs the low into opposing PD rays, it ran into this bullish fair value gap, and then we had another move to the upside. And from there, we had another bear trap. Notice that price left this high, then it ran it, focusing on sell side liquidity. It took out sell side liquidity into opposing PD rays. So we had this bullish order block right here, which was overlapping this bullish fair value gap. And it ran to the main draw on liquidity. So it literally formed 3 traps on the way towards the main bigger draw on liquidity. So this is how it traps a lot of uninformed traders who are not aware of the whole overall bigger picture. And again, exactly why I'm saying that all the foundational things will help you understand the actual direction for the day, because when you do that, when you have all of the puzzle pieces nicely aligned, banking this whole run becomes very simple and very easy, because all from there you need is a clear confirmation on execution timeframes, not even really focusing on entry models and stuff like that. From there, when we see order flow taking place, this is when we simply take advantage of all of these traps right here, just pushing towards bigger drawn liquidity away from bullish PD race right here. So all that here really happened. I think you guys remember that 31st lesson. Price was building these traps, and all that it was actually doing, it was running sell side liquidity into opposing PD rays, and I'm talking about bullish PD rays, towards the bigger draw on liquidity right here. And a lot of traders saw these type of developments as potential short opportunities because they thought that this low, this low, this low, when price broke below it, they thought that it was a shift in delivery, which actually was just a simple liquidity shakeout. Price taking out buy side liquidity, sell side liquidity, dropping into opposing PD ray and heading higher from there. So in other words, it wasn't forming strong highs, it was forming strong lows towards the bigger draw on liquidity. And of course, we want to follow this direction and push away from these strong lows that are in a clear bullish order flow. That is also backed by time of the day. That is also backed by the lower time frame development, as we were on a buy side of the curve of a 4-hour market maker buy model with daily and weekly time frame direction moving towards a bigger, higher time frame draw on liquidity. So now the profits are banked. We have CPI later today during near kill zone. So you guys, I think, remember that CPI usually gives very sharp moves, very similar to what we see during NFP. So this is exactly why I'm personally not going to be trading for the rest of today. And I would really advise you guys do the same, because we will see a lot of mess and a lot of unpredictable, choppy market behavior before that event happens. So that's all for this breakdown. I hope it was insightful, and I will see you in the next one. Take care, guys.